And all right, I think we're good. It's recording, and I'll start showing my screen in just a moment. But first, I want to introduce myself. Of course, my name is Seth David. I am the Dean of Beans at schoolofbookkeeping.com and president at Nerd Enterprises Incorporated. Quick little background on me. I can see from some of the attendee names that some of you know me, some of you may not. I have been doing this for a long time. I started my first company in 2003, consulting with people and helping them with QuickBooks specifically, and doing consulting, bookkeeping, and long story short, that evolved into training. And I built up a training franchise substantially by putting videos on various topics on QuickBooks on YouTube, and that, of course, has drawn in a substantial audience of people who seem to like what I've done. So, of course, when QuickBooks Online came out, I started looking at that and doing videos on that as well. And more recently, I put more emphasis and focus on it, and I have more and more clients who are using it, which really brings us to the topic of today's webinar, which is how to audit your company files in QuickBooks Online. And I'll give you a little bit of background on where I'm coming from on this. Back a few years ago, probably more than a few to be technically correct, I was working at a CPA firm, and I was sort of the lead in charge on their audits and reviews. And I noticed as we were using the CCH audit guides back then that the process really in the bigger picture was one where we really just, and you know the expression, you beat up the balance sheet and then go through the profit and loss. And if you really follow along your audit guides, that's typically what they have you doing, right? We're going to confirm the cash balances, and by that I mean specifically we send confirms out to the bank saying what we show the balance to be, and we ask the bank to send back, a signed letter acknowledging that this is what the balance is, right? Then we go through and we do all kinds of testing. Now, later on, when I was doing more consulting with small businesses along these lines, what I started to realize was that this same or similar process could be employed with respect to small businesses. Now, I'm not going to send confirms to their bank, but I can certainly still check that the reconciliations are done to my satisfaction. And what that looks like specifically is, of course, I'm going to see what the last reconciled balance looks like and make sure that that agrees to the reconciliation report. And, for that matter, I can go through a similar but much less formal process of reviewing the books so that I could satisfy myself that the balances were accurate. So that's what I want to kind of walk through with you today. Of course, if you have questions, please post them in the questions and answers, and I will stop periodically to review them. Woody, it sounds like you're here with us, so please interrupt me if you think there's a question that warrants my attention right away, even if you're not sure. I am going to share my monitor. If somebody could just confirm for me that you can see my QBO test drive company here, Craig's Design and Landscaping Services.
Yep, see it.
Perfect. So, like I was saying, I started to do this process, especially with new clients. In fact, it's what I do with every client that I'm onboarding for the specific purpose of determining what I think the scope of the job looks like. Because the other thing that I'm doing, and this is where we talk a lot these days about the firm of the future, is I'm employing value pricing, which means before I decide which package the client belongs in, I want to get an idea of what the scope of the work looks like and what we're going to do for them. And it's not so much even in terms of trying to determine how much time it's going to take, because as we well know, with value pricing, we're not trying to consider the time, but it's more looking at what sorts of things need to be worked on each month. By looking at the balance sheet, I can see if there is a lot of detail in the accounts receivable, which is going to mean really paying attention to that area. I can see if there's sales tax. I can see if there's payroll liabilities. And that, of course, clues me into the fact that we have payroll to be concerned with, right? Some businesses don't have payroll. So all these things, of course, play into how I'm going to spec out the job and price it for the client and say, here's what I think we need to charge you every month in order to deliver the final product, which is going to be a series of reports, set on a predetermined frequency. It could be weekly, monthly, quarterly, whatever it is, depends on the scope and what the client wants and how much they're willing to pay, frankly. So all of this is to say that I do this review process, going through their balance sheet, and then I'm going to share a quick story with you that led me to start doing this more and more and involving the client in the process. And what happened was when I started doing this value-priced bookkeeping service, and mind you, I was pretty much out of the bookkeeping services game. I had a couple of clients on the side that I've kept, and I've always said, and I always will say, I'm always going to at least keep a few clients that I'm always working on myself, because that keeps me fresh and it keeps me in the game. And this way I can see from very specific and practical experience, what things work, what things don't, and so on and so forth. So that when I'm out there guiding and advising other bookkeepers and accountants, I'm actually speaking from experience and it's not just, conjecture. So what happened is I had a client coming in. He was a referral from a CPA friend of both of ours, a mutual friend, and he really didn't want to pay that much for the services. So at first he needed his books put together. He came to me with no books. So I quoted him on the cleanup job. We agreed, and as we were getting to the end of that point, and we were coming to the point where we need to decide what he's going to start paying on an ongoing monthly basis now that everything's entered and cleaned up and caught up, I wanted to charge him $350 a month. He's a small business and didn't really involve that much in terms of what needed to be done. So that's why I was already looking to price it there. But he didn't even want to pay the $350. He wanted it to be $300 a month. So we're starting to go back and forth about the $50 a month. In the meantime, the point came where we had the books caught up and cleaned up, and I said, you know what, let's forget about the price for a minute, and I want to have you log in with me because I want to review your books with you. And I did with him the process that I'm going to show you here today. It took about an hour, maybe a little less, and it took probably a little longer than it might take for me to do it with you here, because he was the client, so he had a vested interest in understanding what I was showing him specifically with respect to the books themselves, so that he was stopping me along the way and asking questions, and that ended up being really the whole point of it. And I'll give you an example of one thing. So one thing we settled on was the guy's a real estate agent, so he pays to print signs for when he has open houses and things along those lines. And we just put that cost in a printing line item on the P&L. And when we got there, he said, no, I want to include that in my advertising cost, because even though it is printing, I consider it to be part of the bigger picture of what I spend on advertising. So I said, fine, I have no qualms about that. And so those kinds of things where it's not a matter of right or wrong, but more a matter of how do you want to see it presented on your financials became very important. And I realized that this review, having the client directly involved in it, was not only very important, but very powerful, because, and this is really the ultimate point I want to share with you, by the time I was finished with that call with my client, he said, and by the way, I'm looking at the questions. You're only supposed to see the, oh, no, you shouldn't just be seeing the welcome screen. You should be seeing the QuickBooks redirect. It looks like some people are only seeing the welcome screen still.
We're seeing the home page of
okay.
the sample file. That's what I'm seeing.
Okay, all right. So then, all right, there's a couple people who commented in the Q&A that they can see the welcome screen. Okay, so moving along, what happened was at the end of that call, he came in and he said to me, Seth, and I didn't even bring up the fact that we hadn't quite yet settled in on a monthly fee. I wasn't even going to bring it up. But without me even bringing it up, he came back and said, Seth, by the way, the $350 a month is fine. And what that told me was that the process that I just went through with him, while it wasn't even the intention, wound up showing him how much value there was in what I was doing for him. And he had never seen an accounting file before. Prior to me, the accountants who had worked previously on his books just kept it internally and sent them reports. And I got the impression never once bothered to go through those reports with him. And who knows if he really understood how to read them. So going through this process with him turned out to be really powerful on a number of levels. And probably the most important one, as I learned walking away from that experience, was, again, impressing upon the client how much value there really is in what we do for them. So, and I've talked to people who say, oh, I don't, my clients don't want to look at reports. They just want me to do it all for them. And, I suppose, each his own, but My argument there would be that if you want your clients to really understand the importance of how the financial information can and should be used, then I think they don't have to be accountants, they don't have to get a degree, but they need to get involved in the process of going through their financial reports so that they can understand it. Because hopefully your purpose in doing this, and this is just my opinion, hopefully your purpose in doing this goes well beyond just wanting to be able to file a tax return and much more into the realm of, let's look at this information once we feel that it's accurate and reliable and use it to make important decisions about where to go with the company. And there's lots of little cash flow analyses that I do, some, just narrowly focused on the short-term picture, others much bigger picture, that I do with clients to help in this process. But first and foremost, we have to satisfy ourselves, of course, that the information is reliable. And that's where this process comes in. So it serves two purposes. One, ensure the reliability of the information. Two, demonstrate the value of what you really do for the client. Involve them in the process, because the other thing is, there's feedback that I get from the clients as I'm going through it that I would otherwise have to email probably 16 emails back and forth to get to the bottom of something that on the phone can be resolved in less than 60 seconds. Such as, and you're going to see this when we get to things like accounts receivable, and especially if it's the first time I'm looking at the books, I don't know whether or not they're aware of why somebody is over 90 days past due. And I can't tell you how many times going through this process, clients have in some cases said, oh yeah, I know about them, they're all good, it's a long-term project, we put it on hold, whatever the reason might be. Oftentimes there's a perfectly good reason why we have old aged AR on the books, and so we leave it alone. And then in other cases they come in and say, oh no, that's already been paid, I'm sure of it. Which means that there's a problem with the bookkeeping, because now the question is, okay, if it's been paid, where'd that payment go? And 9 times out of 10, maybe 8 out of 10, what it means is that the payment was maybe booked directly to income, so now I've duplicated my income because it's on the payment and it's in the original invoice, and the two need to get married so that I only have the income once. Then I have the situation where they look at it and say, I have to follow up on this. It should have been paid by now, right? So, and of course, in those cases, the client's really appreciative because I'm helping them become aware of issues that they weren't aware were there and never would have been had they not gone through this process with me. So I'm going to click over here on the reports area, and I'm going to dive right in. The first thing I want to show you, though, and this is unique to QuickBooks Online, if we go into, I'm going to go to All Reports. I like going to All Reports because when I go to recommend it, of course, it's giving me, a limited list of reports, which is useful for the common ones. But, especially if you're new to QuickBooks Online, I strongly recommend living in this area for a while, the All Reports area, and get comfortable and familiar with the reports that are in here. Because if you have spent a minute in QuickBooks Online, and especially if you come from a QuickBooks desktop background like I did, then there's a few little differences that come into play here. A big one, for example, is the fact that in QuickBooks Desktop, I can go and start from a blank slate by creating a transaction detail report and just build my filters from scratch. Here, it's a little different. I have to find the report that maybe most closely represents what I ultimately want to create and then go in and customize it. Now, that's good and it's bad. I think it's good in a lot of ways because I don't have to keep reinventing the wheel every time I want to recreate a report. I can start with essentially a template and build from there from the standard, whatever that might be, and just customize it into what I really need. And I recently published a video that had a lot of retweets from our community and into it about how to customize your sales forms and reports in QuickBooks Online. So definitely check that out if you get the chance. Google it or contact me and I can email you the link. I like to think it's a great video, and it's on YouTube for fun and for free. So when I go into the All Reports area, if I go into the business overview, down here on the right, you'll find the audit log. So obviously, since we're talking about auditing the company file, this becomes pretty important. Now, one complaint I've heard is it's unlike the other reports, I can't export this into Excel. And it's a legitimate concern. Hopefully that'll change, but you need to get familiar with these filters. These filter options that you have here are very powerful. So if I'm concerned with a specific issue, if I'm concerned that a particular, and by the way, this is one of the reasons I love QuickBooks Online, because yes, I can set up different users in QuickBooks Desktop, but the way it's sort of laid out, in my experience, very few people really do take advantage of that in desktop. People just seem to have a habit of defaulting to just let everybody log in as admin. QuickBooks Online, it's much less likely that's going to happen because the whole nature of how it's set up is that I'm going to send an email to somebody to add them as a user, so by default they're going to have their own login. Yes, people still can give their logins out, and I know that happens, but I would be willing to bet a lot of money that it happens a lot less often in QuickBooks Online, just because, like I said, the nature of how it works. And since I believe that to be the case, then I believe that this part here is going to be very useful to us because, as you can see from this drop-down, I can quickly filter the audit log based on a specific user and now based on a specific date range to see what has this person done, what changes have they made, and to which transactions. And then as you can see down here, I can, by default, show all events, or I can filter it and say, just show me when they signed in or out, show me budgets, and so on. You can obviously figure this out on your own now that you're looking at it. But the whole key here is to play around with this and learn how to use this to your advantage and learn how to use it to determine who did what when, and especially if you're trying to isolate a mistake, or especially if you're concerned that there might be some kind of fraud involved, then this is a great way to narrow it down, especially when you can narrow it down by user to see who did what. So that's the audit log. I just wanted to give you a quick look at that, especially since we're talking about, auditing the QuickBooks Online file. But really what I'm going to focus on here is the process that I actually do when I have a client logged in with me and I audit their file for them. So we're going to go back to the reports, and now I can go into the recommended, because as I started to mention before, the very first thing I'm going to do is start looking at the balance sheet. And by the way, I'm going to actually back up on this 1 second. And bear with me, I've been having some internet issues, so it may be a little slow to load, but we did run a test earlier to make sure, and it seems to be working. So one of the things I actually like to do, and I think I can do it from here. Yeah, so notice if I right-click the reports menu on the left here, I can open that in a new tab. And that's basically a browser function, but this is a way that I can sort of replicate what we have usually done in desktop where we have multiple windows open, right? So this lets me kind of operate from here as my main menu and then pop out what I need. Now, the only thing, of course, is remember that if I have, because now I'm going to open up the profit and loss as well, if I have two reports open in two separate tabs like this, and I make a change to one of them, and let's say that change that I make to something that's on the profit and loss is also going to impact the balance sheet, then of course when I go back to the tab with the balance sheet, I need to refresh my page. It's a browser, so it's not going to update in real time on its own. And Jake, I love you too. I'm looking in the Q&A. Jake says he loves me. So what I do with the balance sheet, as I started to say earlier, is I start with the bank accounts. Now here I don't have an actual statement to compare with, but this part of the process should be pretty straightforward for, I think, our audience here today. I'm going to go in here and when I'm with the client, the first thing I do, without even looking at a bank statement, without even asking another question, I say to the client, hey, does this look right to you? Do you have about $2,000 in the bank between these two accounts? And the answer, hopefully, is yes. Then the next thing I do is I go in and I see when was this account last reconciled, right? And then, of course, I'm going to see the last reconciled date. I'm going to have them get that statement, and we're going to compare it and make sure that the reconciled balance matches up with the statement balance. Then, as an additional double check, if I want to, what I can do is I can go into this account, and I love running this report. It's so much fun. Just bear with me for a minute while the page loads. So if I go in here, so I clicked on the balance right off the balance sheet. And so right now it's running by default for the year, which may be fine in this case, but obviously, customize the date range as needed. But what I'm getting at here is what we can do in the customize. In my opinion, the ability to customize reports in QuickBooks Online is almost as robust as desktop, and it just keeps getting better. So, what I'm going to show you is that there's a lot of the stuff that I think a lot of people don't realize you can actually do in QuickBooks Online when it comes to customizing reports. And the reason you're not aware is because the layout is very different than it is in desktop. So it's almost like we have to go into QuickBooks Online with the intent of setting aside everything we think we know about what this all looks like, and plan on starting over with a whole new program. Because I think the problem that a lot of us encounter, or maybe I should say the frustration that we encounter, is we go into this thinking and expecting that it's going to look and work like desktop, and it's not. It's really a different product. And I've heard my friends add into it themselves say we probably shouldn't have called it QuickBooks. We should have called it something else. So we're going to go in here, and I want to go right to the status. And I want to show only things that are uncleared. And I want to run this report. Now, what this will do, of course, is show the uncleared items, but then what I want to do is make sure that that accounts for the exact difference between the reconciled balance and the registered balance as of a certain day. That's a way that I double check that the information I have is accurate, and mind your dates. Right, so when I go in here, it's of course going to limit me to seeing just that, just the uncleared transactions. So the total of these transactions, and remember the balance in this case doesn't necessarily hold much relevance because, as you can see, it doesn't show me the balance going into the period that I've just run this for. And now that I've filtered it just for unreconciled transactions, then it, even if it did, it would be sort of irrelevant. So the thing I want to focus on is that I have negative 3,799 in transactions here, right? Of course, negative because there's more payments than deposits. In fact, there may not be. No, there's deposit. But the point is that this negative 3,799 should account for the difference between the reconciled balance and the registered balance, right? I expect the registered balance would be exactly this much less than the reconciled balance. But again, mind the date. So if I'm comparing this, if we're in July, and we're looking at the June 30th reconciliation, then I would have to change this to 6/30, of course. And it's yelling at me. It doesn't like my date range. Okay, okay. So when I run this for 6/30/15, assuming I've reconciled the June 30 bank statement, then that's what I'd be getting at here. And I want to run that test. It's just a simple test that I can do. Doesn't require sending confirmations to the bank, but it just gives me a little bit more assurance that what I've got here is accurate information. The other thing you can do while you're looking at this is, you have it sorted by date, and I can see, is there anything really old on here? If I had a check in here from 2013 that's still uncleared, then I'd probably want to export this into Excel at that point and send it to the client if they're not there with me. Or, like I said, this is one of the beauties of having the client right there live with me. I can say, hey, look at this. You have a really old unclear check in here. We need to do one of two things. If you know there's a backstory about this and you can give me a good reason why we should just, offset it in the current period, because we all know not to void a check in a closed period, right? Then I can do that. Otherwise, it might require following up with the payee and saying, hey, did you lose this check? Did it ever clear? And you get some interesting responses from others, and some of them are just like, write it off. And of course, my suggestion always is be honest, do the right thing, and follow up with the employee if you think they, lost and never cashed the check. And I've actually had some clients kind of give me pushback on this, and I said, look, the check is already in your register. You've already considered it out of the balance, so you're not losing anything by doing the right thing. And then there's the whole honesty integrity thing, but that's probably a different webinar for another day. So the point I'm getting at is you can identify issues where, in a case like that, if I have an old uncleared check, and I know it's never going to clear by now, then my registered balance is sort of falsely understated, if you know what I mean. And my expense for the prior year, at least on an accrual basis, would have been overstated theoretically. Or actually on a cash basis, it would have been overstated, right? Because a check would post as a cash basis expense, even though it never cleared. So that's kind of, what I do on the banks. If I want to be really thorough, the first thing I do is ask the client. So asking is actually an audit procedure. For those of you who have ever done audits, you can ask questions. Oftentimes, that's very much part of the documented audit process. Is I asked the client, and this is what he told me, and I put that in my work papers. So going back to the balance sheet, that's how you can test the cash. First ask, then compare it with the statements, the reconciled balance to the statement balance, And then, of course, if you run the uncleared checks report so that you can, test and make sure that there's nothing in there that needs to be addressed, like I said, based on old transactions or just otherwise stuff that sometimes the client will look at, even current stuff, and say, oh, that check should have been voided, so on and so forth. What you're really doing in some respects here is forcing the client to take the time to do something they would never take the time to do on their own. And like I said, the client has a lot of insights about their own company that you don't have because they're in the day-to-day operations. They can answer this question. So like I said, having the client involved directly in this process by logging in remotely with them and having them go through this with you saves so much time, because otherwise what I have to do is run reports, export them to Excel, email them to the client, and it's just sort of brain dead to me when you have to spend that kind of time doing something that if you can get the client to spend 1 hour with you logged in online, you can save, potentially hours of emails back and forth, not to mention having to go back and look for them later. So then, of course, we get to accounts receivable. And for that, I'm going to go back to my reports. Now, in reality, you're going to start to see, if you haven't already, the process here isn't much different than what I would do in a desktop version of QuickBooks. It's just a different interface, right? So now I want to go to my receivables report. So let's go to All Reports, and let's go to Manage Accounts Receivable. And the first thing I always do is run the AR Aging Summary. So I'm going to right-click, and we're going to open this in a new tab. And again, because we're working in a browser, doing the multiple tab thing just saves a lot of time. And I know a lot of people also recommend even bookmarking these, so you get right to that page, whenever you're in a client's file. You can get right to the AR Aging report if I bookmark this. So here again, if I look at this on my own, I have no way of knowing. Even if it's an ongoing plan, I might have some idea. I might start to learn over time who some of the players are, so to speak. But I still don't know for sure, not nearly as well as the owner is going to know, what's going on here. And what I often find, this is a test drive company, so things are pretty clean. But what I usually find, almost without exception, when I do this on a client's books, especially a new client coming in, is we'll see negative amounts here. We'll see that there are payments that don't have an invoice to, that they're married to. And I mentioned this a few minutes ago. So the first thing I do then is I go in and run the open invoices report so I can see what's going on. And again, I have the client there to give me the immediate feedback. A lot of times the client's going to turn around, especially if it's a negative in the current ranges, they're going to say, oh, that's a deposit I received from the customer. And in some cases, we all know, I'm assuming because our audience are accounting professionals, that normally the way we treat the deposit from a customer, of course, is to stick it in a liability. And then, of course, when the time comes to actually invoice the client, take it out of the liability, apply it to the receivable. We get that. But sometimes for practical purposes, and especially if I don't have to worry about the client presenting a balance sheet or related reports to that balance sheet to, let's say, a bank or a stakeholder of some sort, then I let them get away with being sort of sloppy and lazy about it and let them just post a payment to accounts receivable. For practical purposes, that's easier because it's also easier to see when you do go to invoice the client that there's a payment to be applied. Doing it the right way, running the deposits through a liability account, I have to remember to take that step and or run that report to double check before I send an invoice to a client if there's an amount that needs to get applied, such that if there's still a balance remaining, that needs to go to the client. Even if there isn't, I usually like to send it to the client so they have confirmation that, they've been given credit for having paid their invoice. So the process of auditing this is pretty simple and straightforward. Now, in a real audit, of course, I'd be sending a sample of confirmations out to the clients to make sure they agree that this is what they owed us at the time. Obviously, we're not doing a formal audit here. The point is to do something comparable applied to a small business for the purpose of satisfying ourselves that things are accurate and reliable. So again, I look at the client and I say, well, this looks pretty good. We have nothing 91 and over, but what about this guy? What about Red Rock Diner? Right? And of course, I'll click on it so the client can see. And we'll look at this, and then, again, the client will have insights I could never have about this. And the client will tell me, oh, they're good, or, oh, no, you know what, we need to call them. Or like I said before, they might say, no, I know this was paid. So then, of course, if they say this was paid, I'll start doing a search for $156 around that time and try and nail down where that payment is, figure out where it went. Like I said earlier, 9 times out of 10, what it means is the payment came in, it was posted directly in a deposit and booked straight to income so that the deposit plus the invoice equals duplicated income. But it's easy to fix, right? Because all I have to do then is stick a, remove the line item from the deposit that they put in there and replace it with a payment received on this invoice, right? And I can do that pretty much in one fell swoop. I can go receive the payment, then edit the deposit, remove the line that's booked directly to income, and sort of swap in the payment that now has come in from undeposited funds. So very, very easy to fix that stuff. But again, without having a client there with me to comment, that I would never know it. The client would never know it because they wouldn't have taken the time to do this. And again, this is where the client starts to really see the value in what we're doing for them, because right in front of their eyes, we're cleaning up their books and they can see how we're getting things more accurate. And I can almost guarantee you that if you aren't already and you start doing this with clients across the board, you'll probably be able to raise your rates just based on the fact that you're doing this alone. Now, my understanding was that at about 20 or 30 minutes in, I'm supposed to give out the CPE keyword. So is this a good time to do that?
Sure, that'd be great, Seth.
Okay, so here it is. I'm going to drag it over onto my screen. The lovely manatee.
I saw one of those in Florida. I was in a rowboat. They're pretty big.
They're really cute. I mean, for a big, blubbery animal.
They're real mellow. Actually, it was like a calf. I think they go by the same nomenclature as like cows. So it was a calf, and then the mama came over. It's pretty interesting.
That's cool. They're kind of like, they almost remind me like of underwater hippos.
Exactly.
All right, and since we stopped for this, are there any questions?
Now, someone's just asking what they do with a keyword. Just write it down for now. You'll be able to choose it at the end to get credit. So memorize it.
Yeah,
manatee.
Yep. Manatee. And we'll bring it up again at the end in case you didn't get it down fast enough. And then I think what we do is launch a poll. Am I correct? And they can just type in the keywords so that
exactly at the very end. Okay. Yeah, it's real easy. They have a bullet point choice, and they just choose manatee. Yeah.
Beautiful. Okay, so back to business. So again, reviewing the receivables report with the client, tremendously powerful, tremendous value to the client because they can see that what we're doing actually matters. And at the end of the day, I think what they'll also find is that a client who maybe previously didn't care that much about the financial statements other than knowing that they could get a return filed and that their CPA is going to be satisfied that they can rely on the information for that purpose, I think they're going to start to get insights beyond that, like I alluded to earlier, about how this information can be used in a really important way. I mean, just doing this process can improve cash flow, especially if you look at this and find that there's a lot of old aged receivables that you just need to get more on top of. But sometimes you can, and I've had this happen, where a client went through this with me, and as a result, the client had their bookkeeper or somebody, if it wasn't they themselves, start getting on the phone. All of a sudden, they collect $10,000. Wow, look, bank account looks a lot better, right? So it's these kinds of things where, and this is coming back to when I started my original company and went out there consulting. I was almost taken that, well, I should say I was very taken with the fact that people I know thought of accounting and bookkeeping as very boring. So I said to myself, why does it have to be boring when in fact this information can be used to a very exciting end, especially when I can help a client bring in an extra $10,000 that they wouldn't have otherwise been on top of. Maybe it would have come in over a longer period of time, just organically. Maybe some of them never would have gotten paid because they weren't paying attention to this. And so this is where I think when you start using this information in a more strategic way, that's where the accounting and bookkeeping does actually get very exciting, even if they weren't inclined to think of it that way before. So again, accounts receivable review, critically important, and again, we're working our way down the balance sheet. And what I often like to say, when I explain this, is the balance sheet is our checklist. So I do this review initially with the client when I'm onboarding them, and then depending which of my value price packages they're in, what I will do is I will do this review with them on a periodic basis. Obviously, the ones who are in the higher price packages, they're going to get this review monthly. The ones in the middle, quarterly. The ones at the lowest tier, annually, right? If nothing else, if not sooner, with or without the client, I need to do this sometime around November for two reasons, right? And for the bookkeepers out there who are actually doing the bookkeeping work, pay attention because this is really important. And you'll really wow the CPAs who work on the clients that you do the bookkeeping for with this one little tip, which is that sometime around November, you'll want to do this process. You'll want to, at best, involve the client after you've completed your review, because now you want to do a projection. You're going to want to say, okay, here's the profit and loss from January until November. Here's the balance sheet from January until November. And you say to the client, how much more income do you expect you're going to earn over the next 2 months? And you get the client, and you know, some clients hesitate. They're like afraid to give. Just say, look, nobody's going to hold you to this. You're not going to pay taxes on it, but I just need to get a gauge on what we think it's going to look like. Right? And so you do a little mini projection of what the P&L is going to look like for the last 2 months of the year, and you send that to the CPA so they can do a tax projection based on that. And that way you have plenty of time between November and December to act on that, so that if they're looking at a huge tax liability, they have the time to react and think in terms of, what can I do to mitigate this? Can I set up a SEP IRA for my company? Can I set up some other retirement plan? You know, there's any number of things that the CPA can now use this information strategically to work with the client and act on it, so that we can not defraud the IRS, but rather think strategically and think smart and figure out what we can do to minimize the tax liability and maximize long-term savings for the client. So now we're really helping the client on so many more levels than just producing financial statements just to get a return filed. And that's what I think is so important, especially as we talk about the firm of the future and move in, and there's less and less data entry required because more and more of this gets automated. That means our role is changing, which means we want to put that much more emphasis on this kind of stuff because we can. So let's go back. Now I backed up back to the accounts receivable report. Let's go back to the balance sheet. And now we have inventory asset, right? So we're going to want to run some inventory reports. So let's, this is again why I like to go to all reports. Now this is something I always forget, because once you kind of go in a level, you want to click right up here where it says all reports. That takes you back, right? So it takes me back up to all of the reports rather than just the managed accounts receivable ones, which is where I was. So now over here we want to go manage products and inventory. And the first thing I want to do is run the inventory valuation summary. And I want to check, I forgot to right click and open up the new tab, but hopefully by now you already got that. So we're going to want to run this. And the first thing I want to do, and I've done this for years in the desktop version, is I want to make sure that my asset value here agrees to the balance sheet. So this says I've got 596.25. Survey says 596.25. Why would this be different? I'll give you a perfect example. It happened actually in a desktop company file that I was looking at a week ago. I was going through this client's books and doing this very review, and I looked at the inventory valuation summary and compared it to the balance sheet, and there was a difference of $300,000 exactly, to the penny. And I had a big old smile on my face because I knew exactly what to look for. So I said, let me see if I get lucky. And it's based on one transaction, especially with such an even amount. I suspected it might be. And sure enough, I found a journal entry from December 31st of 2013, debiting inventory for $300,000 and crediting cost of goods sold. And it was an inventory adjustment. Can anybody guess what the critically important problem is with doing a journal entry like that to inventory? And I'm assuming we can't, maybe we can take people off mute if they want to answer before I move on. I'm curious to know how many people would get this.
Probably better just to answer in the Q&A if you guys have
Okay.
ideas as opposed to taking people off mute.
Anybody want to take a stab at that in the Q&A? Why just take a guess at why that might be different? All right, so
we're getting, someone said, yep, go ahead, you can see it, sorry.
Yeah, no, that's okay. So inventory adjustment is yes, that's the problem. We have a journal entry that we've done to perform an inventory adjustment. Sales tax potentially could be it if it was mishandled, and Laura has it nailed. You need to adjust the items. And that's just it. I can't post anything to inventory without going through the items, and a journal entry doesn't allow me the opportunity to do that. So the problem is that puts that $300,000 difference into inventory, and it's a permanent difference. It's never going to get absorbed out when I sell inventory, out of inventory asset, and into cost of goods sold. So the answer is I have to go back and potentially have the client figure, either I have to reverse it in the current period and show like a prior period adjustment to inventory, then probably have her take inventory and make sure we have the right asset value as of today after making that adjustment. Or I could go back, if there's a way that she can go back to 2013 and give me the list of items that made up that $300,000 adjustment that they were making. And then what I can do is I can swap out the journal entry with an actual inventory adjustment. You know, and the easy way to do it, of course, is with a $0 bill, right? Where I would, in the items area, I would adjust all the items in, right? And then, assuming it was an upward adjustment to the inventory asset. And then over in the expenses area, I would reverse out the inventory asset directly, and that way I'm swapping out the item-based $300,000 for the non-item-based $300,000 that was accomplished with the original journal entry. So, and it's important to understand this kind of stuff, especially when you're going to do this kind of review, especially if you're doing it in front of a client. It really helps because now you know what happens when you do that kind of thing in front of a client. They really have confidence in you. They really believe, wow, this person really, I picked the right person for this job. This person knows what they're doing. Right? So it's things like that where you can uncover things that they would have no way of knowing, right? And then you say to them, see, our inventory would have been permanently overstated by $300,000 had we not gone through and done this analysis. So now I did get lucky, but what you would do is, what I did do actually, ultimately, I didn't do a search for the amount. I have to correct myself on that. I actually clicked into the inventory asset, and then I filtered the report I looked at the transaction type. So I filtered by transaction type, and as soon as I saw there was something, I filtered it for journal entries, and then as soon as I ran that, it immediately filtered all the transactions down to one, which was that adjustment for $300,000. That's how I actually found that. So really, really important to to do this kind of stuff. Next, we look at undeposited funds. So what am I going to do there? I'm going to go to make a deposit, right? So let me just go over here on the profit and loss, and I'll skip that for a second. And I want to make a deposit. So we go to bank deposit. And again, this is the same exact way I do it on the desktop version. We just have a different kind of screen. And so here I see the undeposited funds, 2062.52, and ignore my little smart vault pop in. It's really cool, by the way, how Smart Vault works with this. 2062.52, 2062.52. So first I want to confirm that the amount agrees, because again, this is another account that sometimes clients will post journal entries to, which sticks something in there that never goes away. And then the next thing I want to do is I want to say, hey, client, and this is yet another situation where I need the client here because I don't know, and I can say, hey, client, these are from June 21st. They're almost a month old already. What gives? I'm assuming you would have deposited these by now. And then we get essentially some version of one or two answers. Either they're going to say to me, hey, Seth, yeah, we deposited these. So again, we're looking for a duplication somewhere. Or they say, hey, you know what, Seth, actually they asked us to hold on to the check. Okay, as long as I have an explanation. Then again, I have somewhere, hopefully, as I'm going through this process where I'm documenting this stuff. In my own case, I use Evernote. It's perfect for this. And I just document that the client answered and said that they were holding the checks. And now I can put in a tickler, so I can make that note and then put in a reminder for myself. And because I now ask the client, okay, did they say when you're going to be able to deposit, or you're just waiting for them to call you and tell you? And so one way or the other, I figure out from that where to set a reminder for myself to follow up with the client. Let's say it's in a month, and say, hey, did you ever get those checks? Because again, the client, their mind is in a million other places trying to run and grow their business. So even though it's going way above and beyond probably what anybody would really expect, why not do that? Why not blow the client away a month from now when I call them up and say, hey, remember when we reviewed the books a month ago and you told me that Cool Cars was holding on to their check? Well, I just want to follow up and say, did you ever get that check? And I almost guarantee you 9 times out of 10, the client's going to come back and say, hey, you know what, that's a great question. Let me check on that. And it's little things like that that build so much more value in the client's eyes in terms of what you're doing for them. So undeposited funds. Where do we go? Where's my balance sheet? There we go. All right, the truck original cost, what I usually do with fixed assets in general is I ask the client for a copy of the tax return, and I compare the fixed asset schedule there with what's in QuickBooks. The other thing you can do, especially when you get to that year-end part that I mentioned, when you're doing this in November, and then I'll go through this and I'll drill in, I'll click on the number, and I'll run a report for just this year to see where the new purchase is. Now, the other thing you want to do when you're doing this is you want to search for unrecorded things that belong here. Like maybe there's some equipment that was booked as an expense that was more than $500 or whatever threshold you're comfortable with that should be in fixed assets. So now you want to perform, in auditing, the classic one that I always remember being talked about was the search for unrecorded liabilities. But that applies in many other parts of the balance sheet, such as here. So you want to search for unrecorded fixed assets, right? So here I have a journal entry. It's recent. So it looks like we just bought a truck for $14,000, right? And you might even want to, if you really want to be thorough, you might even want to ask them for the bill of sale from the car dealership or whatever so that you can confirm that this was booked properly, right? I was just going over this with actually one of my bookkeeping scholars from School of Bookkeeping the other day, where the company bought a new truck and they had a trade-in and all this stuff going on. So I had to bring up the bill of sale from the dealership so that we could go through the journal entry, and I taught her how to book the journal entry, including the trade-in, so that things were accounted for properly and we had the right fixed asset value on the balance sheet at the end of the day. And I showed her how to properly write off the older fixed asset that was being traded in. So it's things like that we can do to be extra thorough and really blow the client away. I can't believe it's already 11:15. The time flies by when aren't we having fun? So accounts payable, the process of reviewing that is going to be very similar to accounts receivable, right? We're going to run the aging. So here we are back in all reports. Let's go back to all reports. I get tripped up on that often. I always forget that I've gone like a level deep into the reports, and I'm going, where am I? Why am I not seeing these things? So let's go to Manage Accounts Payable, and we're going to run the AP Aging Summary. And oftentimes, as I kind of walk through on the receivable side, running the summary is sufficient as I'm going through it with the client to have them, usually they walk away with some follow-up items, some things they need to research. And sometimes we get an old payment and it's not an issue of having to post an invoice, so they really have no idea. And I tell them one of two things. Either you can research it, or I can post an invoice in the current period, pick up the income, and you'll pay the taxes on it. A lot of times it's such a small amount of money that it's not worth it. You have to balance out what's it going to cost to put in the time to research, let's say a $250 invoice, versus picking up an extra $250 income, because presumably if I have a payment in AR that was sitting there as an orphan payment, not applied to an invoice, and assuming we're paying on a cash basis, that's not going to have shown up as income. It's going to be one of those reversing entries that QuickBooks doesn't do when it comes to going from accrual to cash, right? Because when you have a balance sheet item sticking out there like that and it has no tie-in to any income or expense, then when reversing this stuff from accrual to cash, QuickBooks, it's kind of the way I like to describe it is QuickBooks just doesn't know what to do with it, right? It's just like if I have an invoice for an item that's linked to a customer deposit liability, everything there is happening on the balance sheet. So again, if that invoice isn't paid as of the balance sheet date that I'm running, therefore accrual to cash, it's not going to know how to reverse that. So you get something, and all that was to say that if I have a $250 payment out there in accounts receivable from last year, the income wasn't picked up. And if the client doesn't want to spend the time and money to research it, then I'll just post an invoice to some generic income item in the current year, apply the payment so that on a cash basis, we'll pick up that income this year and pay the taxes. Simple, clear as mud. So the payable side is going to be the exact same process, except obviously we're looking at payables instead of receivables. But same thing, sometimes you'll see negative payments. And if you've been doing this for as long as I have, and some of you maybe even a lot longer, then you've seen probably everything I've seen, which is, you think everything, although I still get surprised sometimes. But what I'm going to find here oftentimes is, and I've seen this on the desktop more than on the online version of QuickBooks, is where I get negative in here and I drill in, and it's an actual bill payment, which can never happen, by the way, without at some point having had a bill that it got applied to. I can't post a bill payment on a bill without it being applied. So what that always means is that the bill, after I recorded the payment on the bill, somebody went in and deleted the bill. Or, and this is almost worse, somebody went in and unapplied the payment from that bill. They unchecked it. Why would they do that, right? Either they just got sloppy and didn't know what they were doing, or who knows. So the point is, you might see some negative numbers in here, and obviously that's the first thing you want to research. Before that, you're going to look at this with the client and ask them, say, does this all look right to you? Why is PG&E not paid yet? you know, it's 31 to 60 days old. That looks like, you know, an electric utility. That's not the sort of thing we usually have in dispute. And even if you did, you wouldn't want to not pay it because they'll shut your lights off. So, you know, this kind of thing, especially looking at the context, right, you know, who it is, would certainly alarm me. And I'd say to the client, you know, we probably want to pay this bill before they turn off your electricity. And the other thing that it suggests, since there's nothing in the current or 1 to 30, is that we paid the current bills, but for some reason this one didn't get paid, right? And again, there may be some explanation. Maybe in the following month, they paid the bill that included both of these, but they entered it as a separate bill for the full amount. So now we've duplicated the expense. So you see the kind of thinking that I put into this when I'm looking at this. I'm not just looking at the service. I'm thinking all around the transactions, and I'm trying to think what could have occurred. I'm almost trying to predict what explanation might work, so that when the client comes to me with their explanation, I can think in terms of whether or not that makes sense. And if it doesn't make sense, then we can research it further. If it does make sense and I'm satisfied about my answer, then I document it in my notes in Evernote, and I move on. Right? So the beauty of all this is that it's really easy to drill into this stuff and audit around. Go back to the balance sheet because I'm running low on time. But I think by now, hopefully, you're all getting the picture of what I do here. So we did accounts payable. The credit cards, same thing as a bank account. Confirm the reconciliation. Credit cards, you likely shouldn't have any unclear items, I hope. You know, the only thing they'll run into is, as is often the case, somebody records a bill to pay off the credit card, so we're effectively transferring the liability from the credit card to the payable. And that way, and sometimes because of that, there's a lag in the date when the payment actually hits in the credit card register versus when it's actually paid. And you'll catch that when you're actually reconciling the credit card account. And obviously, we want to make sure it's reconciled the same way we do a bank account. So then we get into Arizona Department of Revenue. I'm assuming that would be, you know, a sales tax thing, probably, right? Board of Equalization payable. Definitely a sales tax thing. State of California is a state board of equalization. That's who we pay our sales taxes to. Usually when I see Department of Revenue for a state, that's also sales tax. Could be state income tax. So, you know, again, you just want to make sure you understand exactly what these things are and make sure that they're right. If it is sales taxes and you see this, what I usually will do is I'll drill in, and I want to see that the amount is accumulating from a series of invoices. So I have an expected pattern I want to see here. I want to see invoices accumulating the sales tax amounts, and then I want to see either quarterly or monthly payments that diminish that balance. It's not necessarily going to zero out because I have timing differences, right? Usually what happens is after the quarter closes, I file and pay my tax return, so the payment in April is paying off what accumulated from January through March, but that payment's posting in April, during which time between January and when I paid it, I have newer invoices that weren't included in that filing because they shouldn't be. So you all get my point. You know, it's not always going to zero out. So I'm looking for the pattern. I want to see that I accumulate and then I pay. In this case, we zeroed out. So that one looks gorgeous, right? But that's the process. And then, of course, you can certainly have them produce a copy of the returns that they filed and compare that with what you have in QuickBooks. The other thing that's really smart to do is compare those, especially payroll tax returns, right? Because now in some cases we're going to get into payroll liabilities. What I love to do is get those quarterly payroll tax returns and run my quarterly P&L and just make sure everything jives. Because you know what happens, same thing that happens over the close of a year, after the fact, after the sales tax has been filed or after the payroll return has been filed, somebody goes back and changes something during that period that throws things off. So at least we can catch that early and make whatever adjustments we need to make in order to get it back in line with where it needs to be. And if you do that every quarter, then your life is made much easier at year end, right? And when you're doing those projections in November for the client, it's much more likely to be much more accurate. So that's how we do with these. Loan payable, very similar to a bank account. I'm going to ask the client A to confirm that they really owe $4,000. As soon as I look at that, I think, my, that's an even number, right? Did we just start the loan? Have we not made a single payment yet? You know, click in, let's see. Because there should be interest and principal going in and out of this. And so that's what I want to confirm. When I see a really even number like that in a loan payable account, the only explanation I'll accept is, oh, we just got the loan last week and it's been deposited. And that almost looks to be the case here because notice the date on this is June 18th, right? And it says opening balance. So it looks like we were just establishing the loan on the book. So again, it doesn't mean just because something looks off to me, doesn't mean it's wrong. It just means I need an explanation that satisfies me as to why it is what it is. Now, the profit and loss I'm going to go to, I only have like 5 minutes left. So I'm just going to quickly give you one example of what I do on the profit and loss. And the best way to illustrate this is probably with an expense account. So let me just glance here. First of all, what's my date range? I have January through now, so that's good. I just want to find an account with maybe a nice big number. So let's look at the accounting account. Why not? This is the bad part, and I'm not even kidding. Quick story on this. I was reviewing the financials with one of my clients one year, and we got to the accounting, and they saw the fees that they were paying me. It actually opened up a conversation about the fact that maybe it was time for them to hire their own full-time bookkeeper. And again, integrity is everything. So as much as I hated losing the business, I had to be honest with them and say, yeah, your fees to me are at a level where you could probably hire a full-time bookkeeper, to take care of things. They wouldn't be able to do everything that I was doing because I was also doing some CFO level cash flow projection stuff. But, I still had to, maintain my integrity with them because I know at least that I'll lose the client, but they'll go on thinking, wow, that guy's honest, and they're going to refer people to me. So very quickly, it's clear to see based on what is here, but assuming there were 100 transactions in here, we just want to go to Customize. And see under rows and columns where it says Group by and it says Account, we just want to change that to Name. And don't do it by employer or vendor. You want to do it by name because this way we'll group it by name regardless of what type it is. Run the report. And what you're doing here in every single expense account is and again, this is where the client comes in, really important, is you're having them look on with you to determine if based on the name, this is where I told you my client in the real estate business, we did this very analysis in his printing account, and he saw the signage, and he said, no, let's move that over to advertising. I said, no problem. So here we look at it, and we see it broken out by name. We see, okay, Bessie's the bookkeeper, Robertson Associates, probably the CPA firm, right? And then the other question I might have from the client is, do you want to break this out and be more detailed and have a separate line for bookkeeping versus accounting so you can see what your bookkeeper's costing you versus your CPA? And sometimes they say yes, sometimes they say no. Well, actually, I can't. I can do this, right? I can do this very analysis to get at the difference. So I do this on every single income and P&L account. Of course, the income accounts get totaled by customer. There you want to choose it by customer and not by name. And that's more of a reasonableness test, where I look at I shouldn't say I look at the client, we're usually remote, but I have the client look at it, and I say, look at this and tell me looking at this customer, and I'll just pick a sampling to start, unless they start, consistently seeming to be off. I'll show them a few samples, and I'll say, look at this customer and look at the total that you've earned from them this year so far, and tell me if that looks right to you. And I'm amazed at how much insight my clients usually have about those things. And if they say immediately, without even thinking about it, no, that's definitely wrong, then I know there's probably some merit to that, and I'm going to spend some time with them auditing it further and looking into it and trying to find out why it's wrong or satisfying us that, in fact, it's not wrong. And that's the process. I mean, I can't believe how quickly the time went. But that's basically it. So at this point, I guess I can open it up if we have a couple more minutes for a Q&A, and I'm happy to stay longer if anybody else is. So I'll shut up now for a minute, and then we'll bring up the keyword again.
I don't see any questions, Seth. You might as well put up the CPE keyword, and then they can ask. We can answer them as we go. Yeah, sure. Ask a question related to QBO payroll. Sure, Bethany. Just go ahead and type it in. Oh, I'm sorry. I think we need to put the poll up. I meant.
Oh, sorry.
Yep.
Okay, let me do that. And she's asking about the 8655 for desktop versus online. If you have 8650, I'll be very honest. That question I don't feel qualified to answer.
Yeah, I can't answer that either. Sorry.
All right, so I'm in the polls. Select the poll. Please select the CPE keyword and launch. And since it's up on the screen, I hope we don't get anything short of 100%.
Good point. Here, I got a KB too. I'll put in for the 8655. A second here.
Okay.
I just found it. Here we go. Hope that helps. Yes, we should have 100% on this CP keyword. I agree.
It would be, somebody as a joke should just pick like walrus or something.
And Wendy, I forget how long you leave it up, but maybe you.
Yeah, I think we're probably good. It's reading 100%. So
A
Okay,
couple
cool.
minutes is fine.
Okay.
Okay. All right, so we'll leave it up for another 30 seconds or so. Meanwhile, I'm assuming then from the silence that there are no questions, which means either I did my job so well that I answered them all before they could be asked, or I did terribly.
I thought it was awesome, Seth. Thanks for doing it. And I'm actually going to head out, so I wish everybody a good weekend.
All right, thanks, Woody. And then, Wendy, I guess I'll stop the recording in another minute or so, and then I think that's going to download to me, so I'll just send it to you so everybody can get it.
That sounds good. Thank you.
Okay. All right, I'm closing the poll. All right, last chance for questions. Thank you all for the compliments. And then I can't answer how the recording is going to get to you. I can only answer that it has been recorded, and then if I need to, I will provide it to whomever I need to.